Hey guys, Youthful Yields here. Today we're going to be going over the portfolio for the week. So to start off, we have a pretty good green amount on the S&P for the week. There's a lot of gain. There's some movement in terms of the Iranian area, the conflict with Iran and the Strait of Hormuz. That might change given there was a new tweet, I believe, today or yesterday, saying that the communication, basically the agreements fell through. So if we take a look at the state of the futures market, which just opened, it's currently down 1.25%. As to if that's going to hold or not, who honestly knows at this point. But I wanted to tell you guys that. So for the week, we are up 2.29%. S&P is up 3.57%. So our Composer was up 0.45, our M1 Finance was up 4%, and our Webull was down 14.71%. We're sitting around 51K. And on Saturday is the 18th, so we could probably do a deposit here at the end of the week. I'll probably have to start it either Wednesday or Thursday or something, but we'll see. Yeah, so moving into Composer, you can see here that we're basically just running this single symphony still, so that's pretty good. No real updates there. Everything was doing pretty good. You can see, going back to this thing, we are currently sitting in TQQQ. If the market had actually closed above the 200, it was basically guaranteed that we'd be above what would be in this green area, which is basically a normal bull market. But unfortunately, that's not the case, and it probably won't be the case if these futures hold up to be true tomorrow. Honestly, I throw out the dice again. Just futures always don't line up exactly with how the market's going to end the next day, if that makes sense. So it's just a guess. There could be new information tonight. There could be new information tomorrow morning or during the day. It really just depends. So but I think if the market is down, or at least TQQQ is down like another 3%, so I would probably take it like, let's just say 3%, it'd come down here, and so it's not going to hit that 200, even if that 200 is slightly, I don't think it's going to be off by that much. So we probably won't hit the 200 again if that is the case, but we'll see. In terms of M1 Finance stuff, we can take a look here at the activity first. So we received just 1 cent from the security interest or lending interest. That's about it. The other ones were old dividends. Taking a look here at the slices. The best one we had this week was semiconductors. Biggest gain there was from AVGO, 4.69%, then AMD, and then NVIDIA. The rest, actually, for our portfolio did not, bode over too well, but at the same time, it wasn't too bad either. So the next top one was here, and the biggest gainer there was royalty income. And then we had technology, and the biggest gainer there was Apple, which wasn't a gainer, lost us 9 cents, but basically sitting there. Microsoft's still super underweight, which is really interesting. I'll get into that in a second. But moving on to the worst performing sectors, you have here the worst one there was Vertex. Then we have industrials. Worst one there was from Deere Company, John Deere. And financials. Worst one there was from Visa. So Visa and MasterCard continue to decline, which is not fun for the holdings, but it is what it is. But AMD, Google, AVGO, really nice performance, especially on these top two, over 70% on Google and almost 90% on AMD, which is pretty crazy. So yeah, in terms of the opposite side of things, we have 6 here, and Visa and MasterCard are the second and third lowest values there besides or under Microsoft, which is crazy that these are down so much, honestly. But it is what it is. It is what it is. Probably not going to sell out on these for a while because that's going to probably take a while for them to regain their stuff, especially with these two. I have a feeling Microsoft's going to have a comeback not recently, soon. Only time will tell. I think it's just super undervalued. There's a lot they do right. I mean, there's a lot they don't do right. Don't get me wrong. I'm not a fanboy of Microsoft by any means. I'm using Linux right now, but yeah, we'll see. They still have data center stuff. They have deals with OpenAI and all that stuff. So if OpenAI comes out and they smash the IPO, which I'm not sure they will, but if they do, then that could be very good for Microsoft because they have stake in the company, I believe. So, yeah. Going on to Webull, which is our last part of the year. So we Monday 12.6 down, then Tuesday we gained about 5.7, then down 7.4, then down about 1%, and then up about 0.5%. So not the best there, and considering Bitcoin really hasn't gone anywhere in the last couple months. If we take a look here at Bitcoin, let me turn off this indicator real quick. In fact, you can see, wow, that's a huge dip. But I guess for the year to date, it's actually down quite a bit. Yet, uh, it's just kind of been trading sideways for a little bit. So we'll see how long that continues. In fact, right now it's down, I guess, 3% for the day. So that's interesting. We'll see how MSTZ responds to that. But typically how it goes is if MSTZ is down, if Bitcoin is down, MSTZ is down. But man, they've definitely done something different to kind of slow their negative or their downside. Just not good for us. It kind of sucks. And I know they've been starting to diversify into other products as well as such as I think it's STRC, for example. That's like their treasury, whatever this thing is. That's just one example. They have many other examples here. You can see STRD, STRK, STRF, and yeah. I think the main ones, let's see, notional money. So I guess that one would be the biggest there. And you can see, trying to see what this is. Preferred stock to continuously or currently pays 11.5% annualized dividends, which is pretty great if that is true. In fact, we might be able to take a look at this on stock analysis and see how it looks there. Because this, it's really interesting there. You can see currently, 11.5% is what they're showing as currently. So, yeah. I don't know. I guess to me that makes sense, but I wonder if that's like a fixed amount or if it's variable, you know? Um, but it's nice. Again, if this works, that'd be great for them. Not exactly great for me, but also MSTZ or MSTR, I'm sorry, is a completely different product. Technically, as this is for its entire thing, So I don't know, but with besides that, I think that's kind of it for the portfolio. I'm just excited to keep continuing to invest in here. Gonna put another 3,000 hopefully into the account this week and continue to keep growing this thing. I think we could have a very good year. You can see here in terms of year to date, it looks like we're up 3.7%, whereas SPY is down about 0.75 or 0.7%. We can just double check that here. Yeah, it's around there. So that's pretty good. And in terms of total since May 19th, we're actually doing pretty well. You can see that the total portfolio is up 18%, where SPY is up to 14%. Some of that is, here and there. Like, I know this looks crazy, but this is only first of all, super volatile asset on Webull with that MSTZ. But another main reason that's the case is, not the main reason it's the case, but it doesn't really matter for us because we don't really have that much money into it. So it going up 200% in a year really does not matter. And also we went, it's down, 60% still or something crazy. So it's not exactly doing well. It's just kind of slowly rebounding. Well, that's a hope, at least. But anyways, going forward, I'm hoping just to keep going. I'm just going to try to keep steady into the Composer account. Stay in this thing because, it performs pretty well. I mean, it's definitely more volatile. You can see here if I go back, let's say year to date, or 1 year, and then you can look down here on the volatility here, right here. So it's, 3 times the volatility of SPY, but you also got to look here, it's not too far off from QQQ, so it's twice the standard, volatility of of QQQ, but only a little bit more on the maximum drawdown side. But you can see here the percentage difference. So the cumulative return for last year is 78% here. So yes, twice as volatile, but about the same max drawdown and twice as much. So twice as much volatility, but twice as much return. Yet just a little bit more drawdown. So that's super cool. And if we go like the last 3 years, that's a better example there of how much different it is. So you can just look at the annualized rate of return. And this actually excludes 2020, which is one of the best years for this strategy. But the annualized rate of return is 93%. And the standard deviation is about twice as much, but only about 1.5 times as much max drawdown. So I will take that while I'm young, while I'm aggressive on growth, and just trying to maximize that potential. As I start to, slow down, like wanting to slow down, like once I've actually captured enough capital that I'm really happy with, I'll probably start to transfer out of some of these stuff. The main thing that really I would transfer out here would be some of these leveraged ETFs. So you can see that's kind of the whole idea of this as we go in and out of leveraged ETFs. But you can see here, we could take out TQQQ, Teckle, and just basically do the 1x variance. Obviously, it would not be as good as, this, but it's definitely a lot safer. So yeah, I would probably, do that, deleverage just as the time goes on. So I can, some of these 3x ETFs, for example, TQQQ, SQQQ, Teckle, I could probably go down to the 2x ones and then, eventually go just into the 1x versions. In fact, that'd be kind of a cool idea. I could probably try to basically duplicate this at different leverage levels and see, first of all, how much, annualized return compared to the risk, because that is one of the best parts of this, is it really does try to maximize the amount of risk that you're taking on at specific times of the year. So anyways, that is it for me, guys. And as always, I wish you guys a well-to future.